Well, time now to find out what's happening in the business world. Xolani Mbanjwa, afternoon to you, our business editor. Almost called you our politics editor, and then I realized there isn't always that much difference. Oil prices are continuing to go up, and I mean, there have been historic lows last year, but there's a little bit of a surge.
Yes, for the fifth consecutive week, we've seen oil prices rise. It's not good for us as a net importer of oil, and we're just a couple of days away from finding out from the Automobile Association what they think the Central Energy Fund data shows about the second week of July, what the petrol price is going to be locally. And in the mid-month estimates, the Automobile Association said that definitely petrol price might come down, diesel will definitely go up, as well as paraffin. So it's quite an interesting one, and how it affects our local market. And as you know, when the petrol prices go up, food prices go up as well, and there's a huge worry about that currently. But Matete Tulare, the analyst, has more to say about what's happening in the international oil price and the OPEC meeting that is starting next July.
There has been expectations in the market that there will be tightness in global markets, and that is the major factor that is supporting oil prices as demand is recovering. But also, at the same time, OPEC Plus has constrained supply, and also U.S. stocks are falling. So on the back of that, I mean, oil also got some support late last night, obviously on the approval of the U.S. infrastructure bill that obviously has boosted optimism for energy demand and the outlook of energy. So I think the real thing that now that markets will be focusing on is when the OPEC meetings, and obviously Russia and its allies, when they meet as well, which is now called the OPEC Plus, they're due to meet on the 1st of July to discuss, further easing of their supply cuts from August. So, look, the key factors that I think OPEC Plus, when they meet, they'll have to consider are things such as, obviously, the strong growth in the U.S. market, in the European market, in the Chinese market. Those kind of, strong numbers are being bolstered by the vaccine rollout and also economies reopening.
Well, miners are having just the most incredible time at the moment, even West Coal.
Even West Coal, usually they would not have enough capacity to produce enough coal to supply to Telkom. But the last 6 months have been so good that they did not need anybody else to actually supply them, and their production has been high. Their losses have narrowed. If you compare it to the previous period, their losses were up in 56 cents per share. Now it's 3.5 cents, and they are anticipating some good results, and it's something that is we've seen across the board when it comes to commodity prices, and particularly miners here in South Africa. And, it's something that is quite interesting to see also that no one knows exactly where it is going to go. But basically, what the market is hoping for is that this trend is going to continue. And when you think of what Carmen Mpelwane tells us in this next clip, it's a really good time for South African miners.
The share price has reacted positively, so up 2%, but keeping in mind that the liquidity isn't that high, and maybe that's why we don't speak about it that much in the investment world. But in a nutshell, results have come out. The interim CEO has indicated that it was not as prolific as they had hoped. They'd given significant and really good guidance a week ago in their trading statement. Revenue up 2.4%, and I assume largely off the back of increased coal prices globally, which has been driven by significant demand on a global level. Unfortunately for West Coal, one of their key or major customers is Eskom, and Eskom has actually seen a decline in demand for coal over the last year or so. So that has been a significant driver for volume decline for West Coal. Having said that, looking forward, the anchor has been they spent lots of capital recently, and they're hoping to see the benefits of that come out in the next 12 to 24 months.
And then the rand versus the dollar. Rand's doing all right.
The rand is doing all right, but 4 weeks ago we were worried that the momentum that it had gained was actually slowing because it was below 14 rands, and now it stayed above 14 rand to the US dollar. It's something that is good because it's such a huge cushion to the shocks that are going to be there to the South African economy, particularly as we import oil. So this trend that's going on right now is quite good for the local currency, and hopefully it's going to continue. Something that is noteworthy is that it still is, in the past couple of days, it just regained that momentum of being, the best performing, currency among emerging markets. And Madete Tulare explains some more.
It really looks like the rand is back in terms of its volatility. That's why it's also called the rattlesnake. I mean, ever since June the 4th, the rand has been down over 7%. But also, we need to bear in mind that the rand, on most occasions, it's driven 2/3 by global events, and then obviously the other third by local events. When you just look at from an offshore perspective, I mean, over the past 2 weeks, we have been driven by what has been said by the Fed. They have been very hawkish in terms of their high forecast, and they've started talking about tapering for the first time ever since, this pandemic has started. And then when you just look at the local front, I mean, sentiment around Eskom and the load shedding and the impact on growth obviously will factor into the rand, and that's what we've seen also. But, it's not all doom and gloom. Over the past 12 months, the rand is still the best performing emerging market currency.
So it's been a very difficult week for the country, particularly for Gauteng markets. It's been all right.
Absolutely, and then hopefully it continues next week. And as we wait for interest rates decision from the MPC on the 22nd of July, it's going to be important how inflation decisions come up to actually make that decision about interest rates.